All right, hello there, people of the internet. My name is Oduo Jagiro, and this is Fat Fact, the segment where we strip big problems to the bone. No jargon, no coded language, no political fog, because every day you hear numbers, threats, promises, and tonight I want us to talk about Safaricom because there has been so much noise going on about Safaricom.
Safaricom, Kenya.
On the Safaricom issue, we already have a strategic partner, which is Vodafone.
The government has confirmed it is selling 15% of its Safaricom shareholding to Vodacom Group.
Why is the government of Kenya selling the family silver?
For us at Political Headache, we want to take you at several steps back so that you understand what is really happening. Now, these are the facts. The government is selling the Safaricom shares that they have owned for a number of years for about 250 billion.
The National Treasury has announced plans by the government to offload 15% of its stake in telco service provider Safaricom. This will see the government raise some 244.5 billion shillings from the over 6 billion shares which will be transferred to Vodafone Kenya.
This is a partial divestment, and the government will continue to retain a significant stake in the company.
To further safeguard Kenya's interest in the transaction, Treasury has outlined several conditions that have been put in place as part of the transaction, which include that no employee redundancy are declared by the company, that the chairman and the chief executive officer of the company shall at all times be citizens of Kenya, and that no changes to the executive committee of the company as constituted on the signature date without the consent of the chief executive officer. Further, prior to supporting any expansion outside Kenya, that the company shall consult the government of Kenya in respect to such expansion. Further, no significant changes to local suppliers within the next 3 years following the signature date, among others.
Treasury Secretary Mr. Mbadi is saying that this money is going to be used for development in our country, which is a good thing. But the other thing that Kenyans cannot come to terms with is the fact that in this deal, we stand to lose about 16 billion Kenya shillings. But for us to understand Safaricom and how big it has become and why the government is having a windfall from it is this. Safaricom, let's talk about Safaricom, not just as a company, but as a mirror that reflects how power, money, and the state interact in Kenya. For most Kenyans, Safaricom is something you rarely think about until an outage reminds you how much your life runs through that green network. You pay your bills there, you move money there, you call your mother there. If the app freezes, your whole life tilts.
Lipa na in Kenya, we bought la biashara. Thank you, Mom.
In Nairobi, paying with bills on your mobile, it's easier than frankly anywhere else. Now, I'm not talking about contactless or any nonsense where you're Venmoing or PayPaling. I'm talking about where you literally walk into a shop or speak to somebody, they give you their number, you give them yours, bish, bosh, bosh, and it's all done, money transferred. Kenya has become a world leader in the mobile banking revolution, and it's all thanks to the system M-PESA.
This is how deeply Safaricom has settled into our national bloodstream. Now, when Safaricom began in 1997, it was a small mobile arm inside the old Telecom Kenya, the dusty giant that inherited the telecom world from the Kenya Post and Telecommunication Corporation. So, by 2000, Vodacom had taken 40% stake and assumed control operations, okay? Which changed the momentum of the company from a slow state unit to something that behaved more like a private business chasing growth. Between 2000 and 2007, the company moved very fast, built towers, poured money into infrastructure, and prepared the ground for one thing that would permanently change Kenya's economic life. That thing was, guess, M-PESA.
Michael's management and his technical team are very innovative, creating M-PESA. It's the first thing in the whole world.
With mobile phones in nearly every pocket, what if we could move money as easily as text?
I feel very proud that one of our own companies has taken this gigantic step
to bridge that gap through a very simple product such as M-PESA.
I don't think any of us ever understood or appreciated the immense contribution that M-PESA would make to the success of Safaricom.
It was a bold idea, one that got unwavering support from the Central Bank of Kenya.
If you controlled this, or you did not allow it to operate, it could have been a very big missed opportunity.
They championed a groundbreaking shift in financial access.
There will be so much creativity that will come in the future, and you'll be walking around with a phone, and you probably won't need anything else.
M-PESA is much more than a money transfer service. M-PESA is restoring dignity to hundreds of thousands by empowering them with the right tools for economic growth.
Now, M-PESA arrived in 2007 and landed like a small experiment that blew open a door nobody was watching. What began as a money transfer tool for ordinary Kenyans became a backbone of daily finance in this country. It beat banks at their own game. It made sending money easier than walking to the kiosk. It turned a mobile phone into a wallet long before Silicon Valley believed Africans could do anything other than receive aid. By the mid-20s, M-PESA was growing in double digits and closing in on half of Safaricom's total revenue. Those are the facts. This was not just a product. Safaricom, if you look at it, it became a national utility. And in fact, Safaricom is actually a national security issue. As Safaricom grew, something else happened quietly in the background. The government's shareholding remained anchored in its historic ownership of Telecom Kenya, which meant the state had a seat at the table even after 2008 IPO that sold 25% of the company to the public. Let's look at the IPO. The IPO raised over 50 billion shillings as retail investors lined up across the country. It was oversubscribed actually by more than 5 times, and for the first time many Kenyans felt they owned a piece of a large company rather than just watching from the outside. By 2025, the shareholding picture had settled roughly into 3 blocks. Vodacom, operating through Vodacom Kenya, held just under 40%. The state held 35%. The rest belonged to the public. This is the part of the story that brings us to the current debate. The government has agreed to sell 15% points of its Safaricom stake to Vodacom at a price of 34 shillings per share. That is more than 6 billion shares. Now, the total cash expected is about 204 billion shillings for the shares themselves, plus another 40 billion for rights tied to future dividends on what the government will continue to hold. In simple terms, I want you to understand this very clearly. Treasury expects something close to 244 billion shillings to hit its account. The money is earmarked for the National Infrastructure Fund and the Sovereign Wealth Fund that Kenya has been trying to operationalize for years. All right, people of the internet, I hope that you're enjoying this episode very much. And I just had a break to tell you about my new book. You know, everybody says that there is no job, and that is true. Also, that was me 10 years ago. The problem is that everybody is trying to get a job in their town, in their city, in their marketplace. They ask friends for jobs, mothers call uncles, uncles call brothers, but there are no jobs. Let me tell you what no one is telling you. Jobs migrated online. What I actually mean is there are many, many jobs around the world and there is no one to do them except you. I work for Americans myself. I work for Europeans. I work for the Chinese. I work for the Australians. I work for the Canadians. And so, because I have done so much for myself, I said to myself, you know what? I should compile what I've been doing for the last 15 years. So in 2024, I wrote a digital book called Goldmine 18 Hustles for Africans. And then in 2025, AI came. People say AI is taking away our jobs. And for me, I'm going to say false. There are actually AI jobs. Jobs are not being taken by AI, but there are new jobs online that are there because of AI. Na mimi ni nani? I created more jobs. And for now, in my new book, we have 25 online and offline jobs that you can leverage on if you do not have a job. So in this powerful volume 2, I share 25 new actionable online hustles specifically researched and tailored for Africans. My new book provides clear step-by-step guidance drawing from my extensive experience and research, including the mistakes I've made and lessons I've learned over the 15 years that I have worked online. So what can you do online? You can become an executive assistant for busy folks in Europe, America, Canada, and get paid for tasks like watching videos and taking online surveys. Okay? You can build a lot of things. Build a business as a virtual assistant, start an e-commerce shop without capital, be an affiliate marketer, or you can also become actually an English tutor and tens of AI jobs. If you have a job, that is fine. But I also know that you can buy this book for that brother, for that sister, for that mother, for that cousin, for that husband who is watching Netflix all day at home. Buy it for your friend who is always asking for cash. You know that friend. Now, all the information is on the description below. You can also inbox me, you can WhatsApp me, or go to my website, which is oduorjigero.co.ke. And now, back to programming. Now, the question becomes, why sell? And why sell now? The Treasury has been open about the pressure. Kenya's debt burden is eating almost 40% of all revenue, which means the government is constantly looking for money to fill the gap between what it earns and what it owes.
We need investment in infrastructure. But how then do we finance these infrastructure projects? Either by raising taxes, which is not an option because Kenyans already feel that they are overburdened with taxes. So you can't go that route unless you want to cause a civil unrest or unless you're just not concerned about the plight of the people. So this is the route that's the best one to take? Let me just build my point, Janet, because I think we are losing the point here. We are losing the objective of this transaction. Now, the second thing that I would say is if you can't raise taxes, then you borrow. Is there space for that? There is no space for that. So what you are left with is you have to look for other innovative ways of raising revenue, which are not debt creating. And so we have this mature asset, so to speak. What we are trying to do is what one would call in economics, unlocking value of a mature asset.
Raising taxes has reached a breaking point politically, and everybody is up in arms. Now, cutting spending triggers protests because Kenyans already feel weight of austerity. So the state looks at its assets and asks whether selling part of a profitable stake can unlock capital without punishing citizens through new taxes. This is the mathematical logic behind the sale. But the problem is, politics is never about mathematics. Critics like Ndindi Nyoro have attacked the price, arguing that 34 shillings is too low for a company that dominates the mobile market and produces billions in profit every year. Let's listen to what he's saying.
Kiharu Member of Parliament Ndindi Nyoro says the planned sale of government shares in Safaricom has been undervalued, accusing the National Treasury of underselling the shares.
The government of Kenya is proposing to sell Safaricom PLC, the 15% stake, at 34 shillings. Kenyans need to know that Safaricom shares were trading at an average of 45 shillings in 2021, valuing Safaricom PLC at 1.8 trillion Kenya shillings in 2021. And of course, that is before Safaricom even invested in Ethiopia, an investment that is actually becoming a very good decision for Safaricom. And what I just want to say is that the people who are on the other side of the table in this negotiation of the sale, and especially the people from the National Treasury, they are either self-interested, incompetent, or both.
He says the government previously injected money into Safaricom at an implied price higher than that it is now accepting. He raises the question of whether selling such a profitable asset makes sense when the returns could compound far more what the one-off cash injection will deliver. In his view, and in the view of many Kenyans, the state is trading long-term wealth for short-term breathing room. That argument lands easily with ordinary Kenyans who have watched governments mishandle big deals in the past. They hear sale of assets and remember everything from the golden handshake privatizations to asset loss through opaque transactions. The counter argument is that the 34 shillings offer is above Safaricom's recent market price. Now, if you remember, in December, the stock was trading around 28 shillings, which means Vodacom is paying a significant premium to take control. Analysts point out that the block sales usually attract better prices than open market disposals. Supporters of the deal say that this premium is a sign that the government has negotiated well and that converting shares into infrastructure money while keeping a 20% stake is a balanced solution. They argue that Kenya needs roads, power lines, and digital infrastructure now, not 10 years from today, and that a stronger Safaricom under tighter alignment with Vodacom may attract even more investment into the region. Standing between these two camps is the average Kenyan who has lived through multiple cycles of privatization. They have watched African governments sell national assets under pressure and later regret the decision when the new owners extract profits while public services remain weak. Nigeria's failed telecom and power privatization are often cited as cautionary tales. They show that what happens when governments rush, when transparency breaks down, or when deals are driven by a political needs rather than economic logic. This is, for me, why Kenyans are suspicious. And I'm not sure what to say about this. I'm also suspicious. One of the things I find with this idea of sale is that Safaricom actually covers every part of our life. And when you are selling such a huge thing that belongs to Kenya, you are more or less tinkering with the security of this nation. The fear is that it's not just about the price. It's about whether the process is clean. It's about whether the money will go where it's supposed to be. It's about whether we are repeating the same old African cycle of selling family silver to pay today's bills. But we also have to be honest about the moment we are living in. Okay, Safaricom is not a distressed company. It's profitable, it is stable and still growing, which gives Kenya leverage. The government is selling from a position of relative strength. That's what I think, because Vodacom is not a random investor. It has been a partner since 2000. And Kenya is keeping a fifth of the company so that it retains some influence over strategic decisions, especially in telecoms and mobile money, which are sectors that directly affect national security. As I had said before, this is not a total handover. It is a recalibration of control. The larger question is whether this sale fits into the long-term national strategy or whether it is simply a response to short-term fiscal heat. If the money builds roads, expands power grids, modernizes airports, and improves the digital backbone of the country, Kenyans may look back and say the sale made sense. But if the money disappears into recurrent spending or patches over budget deficits without changing the country's economic direction, then history will judge this moment, I think, very harshly. Kenya has had both outcomes in the past. This is why accountability becomes the heart of the debate for me. It is not only about whether the price is right. It is about whether the state behaves like a responsible custodian of public health. Safaricom itself will continue growing, and I think exponentially. It still holds 2/3 of Kenya's mobile market. It still has over 50 million subscribers. It still earns billion from M-PESA and data combined. The company's story is not ending. But the country's relationship with that story is changing. The state is stepping back from being a major shareholder to being a significant minority investor. Vodacom will now have control with 55%. The public remains with about a quarter. Kenya's telecom champion is moving deeper into a multinational structure, which may shape its next decade of expansion. So the debate we are having is really about what the state should own and what it should let go. It is about how a modern government like Kenya balances the need for investment with the need for long-term national wealth. It's about whether our leaders can handle a windfall responsibly. And this has been the problem, that when you put money in the hands of government officials, that money tends to vaporize or go away. And it's about this sale is about how ordinary Kenyans who built Safaricom through scratch cards, premium SMSs, M-PESA charges and daily use fit into this new chapter. For me, I think in the end, Safaricom's history is a reminder that institutions grow through partnership between public money, private expertise, and citizen participation. The challenge for Kenya now is to ensure that this next phase is guided by transparency, strategy, and discipline rather than desperation. Because when a country sells something valuable, the question is never only who buys it. The deeper question is what the country does with the money, whether that decision leaves citizens better off than before. So, thank you very much, people of the internet. This was Political Headache. These are the facts, and I wanted you guys to know what is going on at Safaricom, and I wanted to lay it bare for you. Please, if you're watching and you have not subscribed to our YouTube account, please do hit on that notification bell so that when we have something going on and something that needs explaining, you will get the first explanation on your screen. So thank you very much. Until another episode, bye for now.